Hey everyone, welcome back to the Strike Traders YouTube channel. And the weekly analysis video is a new type of series that I will be starting, and I will be conducting it every weekend. And the main purpose of these videos is to help you with the technical analysis, the fundamental analysis, and also at the end of the video, I will be talking about tweets from the prop industry which tell you what is happening exactly in the industry and where is it going to take a shape. And as a informed trader, how can you make the right decisions and the best decisions for yourself? So I will be talking about a bunch of stuff at the end of the video, so don't miss out the end. Keep watching till the end. And yeah, if you're somebody who's new to the channel, make sure you subscribe to me, and I promise you I will provide the best value to you as a forex trader. I will provide you with the technical analysis that is best to my knowledge. I will provide you with the fundamental analysis, the CPI, NFP, FOMC reports, where are the markets heading, where is gold heading, where is euro heading, every single thing. And I will be also talking about the prop space so that you can make sure that your decisions are in a safer part rather than you going out with riskier firms or with riskier trading strategies. So yeah, let's get started quickly, and let's get to the analysis part. One, let's get to the analysis part and let's understand what has happened exactly in the last week. So let's start from gold first on a weekly time frame. Let's understand how gold has reacted last week, and we shall get a good idea where gold is heading with the last week's understanding of the candle. So last week, if you can see, it was a big green candle, pink in my case, but you guys know, right? It's a green candle. So a big green candle telling there is a lot of good buyers presence. So the buyers are really strong at this particular point, and I genuinely feel that the buyers will still be in power for at least the next 1 week or so. But we also have to understand that there is FOMC statement coming on Thursday, I think 11 a.m. or 11 p.m. or 12 a.m. IST. So big news coming on Thursday, which can actually affect all the pairs, because the Fed is going to give their commentary on whether they want to keep the interest rates at this point, or they want to signal that let's go, we have to cut some interest rates anyhow, so we will start cutting it by March or maybe later half of the year. So the commentary is something that the markets will await for. But the weekly has been absolutely wonderful. It's a strong candle. Now if we go on to the daily, we can understand that Monday opened with a small hammer like candle, and then big bullish candle on Tuesday. Wednesday again continuation. Thursday there was a pullback, and Friday we ended on a strong note. So I think that all the 5 days that we have traded last week, there has been buying. Even on Thursday when there was a pullback, there was a strong rejection. So I think that overall the markets are very strong. Overall gold is looking very strong. It is expecting something good out of the Fed this week. That is what the signal, that is what the price is signaling. But you also can see something over here, that is a daily fair value gap. So we can say that gold is at a supply. Yes, definitely, because if we would have closed above this, I would have been much more confident. But if you go on to the hourly, right, we did not close above this. So we did was rather a sweep on the top, and we started dumping. So there is a chance that on Friday, we might see some kind of dumping or continuation that is going to happen or something like that. But let's first try to understand what gold is seeking for and what are the POIs in gold you can look forward to in the upcoming week. So coming back to the analysis for gold upcoming week, what we can understand is price has already given a 8%, 7% run on the upside, and since the last 10 days of December. So gold has been going higher with an anticipation of what Fed is going to say in this meeting. So this run is not because there is because gold is bullish. this is more of an anticipation run, right? So anticipation run is always, and it's very, very dangerous. Try to understand, anticipation run is not a run where you would actually like to participate very, very heavily. You would like to be risk free, you would like to be light. But when we see on the technical time frame, we can also understand that gold is respecting its daily fair value gaps very, very well, and we are continuously making higher highs, right? So technically, I'm still bullish. I do not want to short gold at this particular time. But the same thing is that if there is any negative commentary from Fed this Thursday, we can see a huge drop in the price and we can see a deeper pullback. That is something that is really, really possible in gold. On a daily, there is this fair value gap which we can again come back to, and this is the only daily fair value gap which which market can respect. Because try to understand, if market just closes below this, right, then none of these fair value gaps will make any more sense, because we have respected the PD array which would have actually pushed us higher, but now we have broken that. So if price does this next week, right, then I think the chances of gold moving higher will be much, much more unlikely. But overall, I'm bullish on gold. So we'll have to see in the real time markets how the markets react on a daily time frame. Now, coming back to the 4 hourly and 1 hourly. So if this scenario does not happen, right, that market is closing below the daily fair value gap, if this scenario does not happen, what can we expect? Now, this 4 hour fair value gap, this 4 hour fair value gap is something where we can actually understand that, okay, some kind of action can take place. Because try to understand this particular thing. Market is reacting from a daily fair value gap, and when it reacts from a daily fair value gap on the opposite direction, when it's in a bullish trend, so you want the recent PD arrays to react on the smaller time frame, okay, so that we can start moving higher. Sorry for the ads. We can start moving higher. But if you say that, brother, I feel that the price is dumping and it's again coming onto the daily fair value gap, then this daily fair value gap is our last chance. And to a matter of fact, if price defies both of these 4 hour fair value gaps, no, then the price will have some kind of weakness, and we do not want that going into the week. So let's assume Monday we open and we are down, Tuesday we are down, Thursday we are down. Until Thursday, if we are on this daily fair value gap, it will be a 50-50 chance. We can either hit or we can miss. Either it can go like this, or maybe we can just change the trend. So this is something that we have to stay careful about as to what is happening. So Monday's opening is also very, very important. We want both these fair value gaps to react in order for market to break the all-time high. And as I posted on my Twitter, the analysis, we have a weekly ERL pending over here. So the price is attracted. We want the price to be attracted and move ahead, so that we can plan what's ahead of all-time high. Because if once we go for the all-time high, right, my targets are $3,000 an ounce. So I think $3,000 will be achieved. It will be a $200 journey. It will be a 2000 pips journey, and I think that is pretty achievable for gold if it breaks the all-time high. Now let's come to the main analysis of dollar. Now let's try to understand what can dollar do this week, and how dollar has reacted the last week. And again, we are going to talk about trade of the week, which is related to dollar as well. So if we go on to a daily time frame, what we can understand is dollar is somehow changing character. This is a typical change of character, which you can say higher high, higher high, lower high. So we have made the first lower high, sorry, lower low, and we have to await for a lower high. Now it may be here or it may be here, but if we break below 106.5 or these areas, we can see another lower low. So a lower low will confirm a downtrend in dollar, a reversal in dollar. But I believe that this Fed's decision again will be very, very important. Now if we take a look from what is happening on the weekly, Interestingly, we are on a weekly fair value gap in dollar. So weekly fair value gap has been tapped into dollar, but the reaction what we have gotten here is not really good. So again, Monday opening matters a lot. I believe that Monday opening will decide a lot of things. If dollar opens Monday here, it starts aggressively till Tuesday and we close above the Friday high, we are set for a bearish on currencies and gold as well. But if Monday we open slightly flat or gap up and then we start dumping, then that is where I think dollar can go further below. Dollar has been rising for almost 3 months to 4 months now, and I think a pullback is pending, and we are reacting from a very good higher time frame area as well. This is a monthly fair value gap. This is also a weekly fair value gap. So dollar's reversals should not be really surprising. Now let's talk about trade of the week, which I feel can be really good. Related to dollar is euro. So I think euro longs will be the trade of the week for me. I will 100% aim. When I mean trade of the week, what I really mean is that, I want to see market coming into my direction, and then me entering into the bias that I have pre-decided while doing my weekly analysis. So it necessarily does not mean that on Monday when the markets open I will buy euro USD. No, it means that if it goes with my bias, I will execute the plan and I will try to make the most out of it. So let's quickly analyze euro USD as well. On a weekly wonderful candle, euro USD has been falling for months and months now. We started this dump in September, October, November, December, January. 5 months we have been consistently falling, and I feel the time has come for reversal. Weekly we have closed absolutely positively. Daily looks very good. There is a pending liquidity here on the upside. So this is where price is immediately attracted. I doubt that euro will go for a direct home run, but this liquidity is something that euro will seek next week. But how to exactly play this, let me just tell you. Now coming on to the 1 hour time frame, what we can understand is it is a string of higher highs and higher lows. So we are continuously going higher, we are continuously pushing higher. For me, what really matters a lot is if dollar can give me any kind of momentum on Monday morning around these levels, I would like to long immediately. That is what my game plan is. If because these are the two fair value gaps, let's assume this is the fair value gap which looks good as well. So if price starts reacting from here, no, then I will 100% like to participate in this particular up move, and I will try to take care of my entries in this particular area. But let's suppose we start dumping lower and we see a late reversal in the week, then I believe dollar this level, sorry, euro USD this level is absolutely wonderful, because not only is it a 1 hour fair value gap, but it's a 4 hour fair value gap as well. And to be honest, there are a lot of fair value gaps from where the euro can react. So we just have to be on the feet. We just have to find the right kill zone to take our entry, the right sweep where we can actually enter. And I think this entire area in dollar 10495 till 104191. So this entire range, right? I think it's a good range where you can enter for longs. You can find your long entries in the move that we have found on Friday. So this is the analysis for euro USD. Now let's quickly go for Nasdaq. This is where the game changes a lot. Why? Because unlike currencies and stuff, stock markets are very different. Stock markets tend to keep going higher. When I want to talk about Nasdaq, I want to talk mostly about what is going to be ahead. So what we can see is we have a lot of earnings coming on Wednesday. We have a lot of earnings comings on Thursday, and we also have a lot of earnings comings on Tuesday, I believe. So we have Meta earnings, we have we have Microsoft earnings, we have Google earnings, I think Tesla is also reporting lots and lots of earnings going to come into Nasdaq next week, and this is where things will get very very volatile, because I think Nasdaq will give you the best opportunities to trade next week, given how many earnings and how many big events are there, because we have the FOMC obviously, and then we also have the earnings. So all this combined, it can be a great week for Nasdaq. But let's analyze where Nasdaq can actually head. All time high, those who are saying, I agree with you, we are going for an all time high, no doubts, no questions asked. But on a daily, I think we have already tapped the daily time frame, daily fair value gap on Friday, and I think, in my view, this should be a good go. So we should start reacting in Nasdaq from here, or maybe pause a little. If I go to the smaller time frames, then there are a lot of fair value gaps which have already been tapped and which can be retapped or which cannot be retapped. But this is my POI. This is my POI for the week. So Monday, as soon as market open, if I get a good long in London, I will 100% try to take the Nasdaq long, and I will not be surprised if we achieve all time high in the upcoming 2 days. But let's say that Nasdaq starts to reverse and we see some kind of fall, then I will really wait. I will really would like to wait and see what is happening in Nasdaq, and then take my actions on, or and then take my trading decisions. So that is how Nasdaq is going to be for me. Monday opening, good opening. This daily fair value gap is enough to aim for 22,130, which is the all-time high. If, let us say, we start dumping lower, we wait. Why am I telling you to wait? Because all the POIs in this time frame, all the POIs in this rally are already filled. Now you will say, okay, but this CPI candle is still pending. I 100% agree to you, and I would love for the markets to come here, because only we will get higher opportunity at this particular point. But you never know. You never know what can happen in Nasdaq. Overall, stay bullish on Nasdaq. Look for long opportunities. Look for long opportunities in kill zones, and try to capitalize the most out of them. That is how I would like to play Nasdaq for the upcoming week. Now let's get out of trading for a while. I have completely talked about gold. I have talked about Dixie, Euro, Nasdaq. Let's actually get into something that is related to the prop industry, and something that can actually that has actually come up in the last few days. And you can see my screen over here. James Glide, he's the CEO of Pip Farm. I believe you guys know Pip Farm is a firm. It's a forex firm, and it's just like the other prop firms as well. So basically, what he tweeted on, I believe it was Friday, is that that there are some hedge fund groups. There are some group traders. Prop firm hedging groups are so sophisticated, they even give you a term sheet when you sign up. Pip Farm is watching you. That's what he tweeted, and it's actually very very surprising to me, because I never knew that there is such a professional service present out there which can help traders pass their challenge, which can hedge multiple prop firms, and help you get a payout. So I really did not know there is such a special service available. PFM, prop firm services, you can see the name, and he actually bought the service. I believe that is how he got this invoice. So this is how these guys are doing, and I see, my opinion is this is bad, absolutely bad. Because when such things are happening, and when a prop firm CEO sees such a thing, imagine what he would like to do. He will try to eliminate all those things, and this is a negative thing. Who knows if they will, if the prop firms will want to strict strengthen their rules for the traders who are genuinely trying to trade in the markets. So this is not a win-win, this is a loss, right? But again, there are a lot of follow-up tweets as well, which he posted, and he was talking about how these guys are giving multiple firms. You can see all the big firms: ACG, Aqua Funded, Atlas Funded, Fires, Quantical, Pip Farm, MFFX, Maven, Funding Pips, Funded Next, E8 Markets. Every big firm is on their list. This is absolutely bad, and I think this is a very very it's I'll tell you what it is exactly. Okay, this can be beneficial for a lot of firms, because while hedging, instead of passing one account, you tend to buy four accounts. You will blow three or you will blow two, and you will pass one, right? But so essentially there is more money going into the prop firm space, but the outcomes are something that is synthetic. It's not a natural outcome. Imagine why prop firms started to fund traders, but we have made a very, this is a very shady way of doing business with the prop firms, betting one prop firm against another prop firm. So this is absolutely wrong, and this tweet is something that I think you should check it out. You can search James Glide on Twitter, and you can go through this entire thread, this entire series of tweets where he's actually telling what is exactly happening with the hedge groups and with the group trading industry right now. So this was to help you understand that such things are also happening in the markets. So please stay careful. I would not suggest you to go with any hedging. you know uh, 1% risk, 1 is to 3 risk reward, 3 trades is phase 1, then phase 2. So try to become a better trader than rather than going to group trading or hedging multiple firms. That will be my take on this particular issue. So yeah, thank you so much again for watching the video, and I hope you all loved whatever I am trying to do, and I hope this brings a lot of value to your own trading as well. And yeah, if you haven't subscribed to the channel yet, make sure you drop subscribe on the channel, turn on the notifications, and I will see you again next week. Have a good day, have a good week ahead, my dear friends, and yeah,